in different time frames, starting on the left with the 10-minute price chart. Next to that, the 5-minute, the 3-minute, and then the 317 tick chart. The timed charts are plotted candlesticks every timed interval, 10 minutes, 5 minutes, 3 minutes, respectively. 317 tick chart on the far right is plots a candlestick every 317 trades. Of course, if the market is moving faster, that particular chart will plot candlesticks faster. If it's moving slower, there's fewer trades, it will plot slower. The timed charts plot regardless of trades or volume every timed interval. The 317 tick chart is the key chart where once we do have a setup in place, we look for the respective buy arrow, white arrow, or sell arrow, red arrow, to populate there, and that is the indication if a setup is in place, something that individually you are interested in looking for. That is where we look for that sell or buy arrow to come in. Below that, we have a series of proprietary rows that reflect where we describe our setups. And so the first row, labeled ergodic, and you can see that there's labeling that we use, and that's how we identify in a very quick fashion the setups that Greg and I discuss. First row is the ergodic row, and it's a set of moving averages represented by two lines. The better view of those ergodic moving averages is when we see them in a very nice sine wave pattern. Right now, the volume chart to the far right is showing the best indication of a sine wave pattern, particularly where the ergodic lines overlap each other. Those tend to be the strongest representations of trending and pattern that we like to see. Sometimes the ergodics do get non-trending. You can see even in the 1 minutes historically there, even in the 3 minutes, the pattern has not been very good. And when we see them very nice, as we see right now, volume E, and we had a signal, and there was a nice indication of a move down there that generated based on very strong scalp setup in that particular case of the volume E. And so those are our ergodic lines, and you can also see we've got 1 minute and volume charts where it's the ergodic, the bias, and the attack information only, does not have the price chart, and that's superimposed over the 317 tick chart, and that's simply because the price chart information is pretty much reflective of what would be represented by the 1 minute or the volume price chart information that we see in the 317 price chart. Below that, we do have the bias line from left to right, reflective of the 10-minute, 5-minute, 3-minute, 1 minute, and volume and 317 time frames, if I can call it that. And the bias is either red or green. When it's green, that means that there is a relative strength of buyers over sellers, and if it's red, it's the relative strength of sellers over buyers. The angles in the ergodics as well, but the angles in the bias is particularly important and plays a significant role in our setups. And as the angle, as you can see right now in the B bias, is angled significantly downward, and that means not only do we have a relative strength of sellers over buyers, but it is increasing. There's an increasing strength of sellers over buyers. Below that, we have the attack chart, and again reflective of the same time frames. And that basically, if you're familiar with balance sheets, is reflective of almost the immediate strength of momentum. And we like to see the strongest indication there is where we have a nice perpendicular attack cross of either the green over the red or the red over the green. You can see in the K attack, historically there was a very strong perpendicular attack of the K red line over the K green line, and that would have been a sort of a shot, immediate shot of momentum there of sellers over buyers. In terms of our setups, we describe them in pairings, and we discussed them as base setups, base 10, base 5, base 3, and then the scalps. And so the base 10s are described by the pairings of the 10-minute ergodic and the 5-minute ergodic, the 10 ergodic and the A bias, the 10 ergodic and the B bias. And then moving from left to right, we have the base 5s reflective or represented by 5-3, 5A, 5B, 5C, and then the base 3s, 3-1, 3B, 3C, 3D, and then our scalps, 1 volume, 1 C, 1 D, 1 E. We also have the volume D, the volume E, and then the only setup, scalp or otherwise, that involve an attack component, the EK. And so once we have a setup in place, well, actually, I should say the setups are defined by the angles. So the ergodic angles need to be 45 degrees, and the bias angles, if we have less than a 10-point range on the day, need to be 60 degrees. And if it's greater than a 10-point range on the day, it means we've got just sort of a broader market range to deal with. We've got more trending, presumably. We can lessen that bias angle to 45 degrees. In terms of the EK scalp setup, we want to see the strength of the spike of the E and the attack of the K. If we're looking at a buy scenario, spiking upwards of the E and spiking upwards, as it is right now, of that green K attack to cross that red line. The scalp charts require a third component at the time of the signal coming in, buy or sell, and that was the F bias. It needs to be angled in that direction. So if we're looking at an EK upward, which is potentially spiking in right now, we also want to see that F bias be in agreement, which it is, or at least it was when I said it there. So once we have a setup in place, we look for, in terms of the base 10s, 5s, and 3s, we look for a pullback, and a pullback can simply be a sideways consolidation in terms of the weaker variety of a pullback, or in a stronger sense, a defined movement in the opposite direction of the direction we're looking to trade, coupled with an opposite arrow. And in that ideal scenario, we can then look for the first arrow. If it's a buy, the first white arrow. If it's a sell, the first red arrow, to populate in the 317 price chart after that setup has materialized. We want to trade on the first arrow of a trend in the terms of the base 10s, 5s, and 3s. In terms of the scalps, we do not necessarily need to look for the first arrow, but we need to look for the next arrow once that setup is populated with the F bias being in agreement. In terms of once there is a trade in place, if we are less than a 10-point range on the day for our base 10s, 5s, and 3s, we do target 3 ticks typically. And if we're dealing with this with greater than a 10-point range, we target 1 point. In terms of the scalps, we target 1 tick for less than a 10-point range, and 2 ticks for when we have greater than a 10-point range on the day. The base 3s tend to be that transition zone between scalp and bigger setup, and so oftentimes we'll look at it in terms of locking in a scalp target, but keeping our view with a longer term target. So greater than the 10-point range, we would look to target and lock in 2 ticks, but have a view of tracking 1 point. We also have a setup 10, which is tracked separately, and it is based around the 10-minute 10-minute ergodics need to be 45 degrees and some angle of agreement in the A bias, 5 degrees, 10 degrees, whatever it may be, some angle of agreement. So in that sense, it is a lesser 10A, but with a setup 10, there is a deeper stop and a deeper target, and the idea is to try and capture the full cycle of the 10-minute ergodic cycle. and that can sometimes be 4, 5, 6, 7 points even. But there is a lot more cycling that does go on, and so it is more of an aggressive trade. In terms of stop loss, typical for the rest of our setups for the base 10s, 5s, and 3s. Typically that's 2 points. For the scalp, 5 ticks. If that happens to fall on a support or resistance level, we can move that back by upwards of 2 ticks. So within, if a support or resistance level is within a tick or so of that 2 point or 5 point or 5 tick stop, moving that back to give it a cushion of a couple of ticks is reasonable, because oftentimes we do see the market turn around at support and resistance levels. Speaking of support and resistance levels, they can be trend lines represented by the blue lines you see in the price charts, or they can be horizontal lines, which in your mind you just simply need to draw in. For example, in the 317 price chart at 93, in terms of a move upward, as we can see right now, that was a support level, and at that level the market did turn around as we saw strong information coming in upward in our smaller scalp charts. Resistance level would be stronger one would be the 97. You can see the market turned around there in a very distinctive fashion in the 317 price chart. You can also see that that in terms of a trend line, 317 price chart, there was a trend line point of resistance at 93.75. The market did move through that, but where we see ourselves coming up to around 97, looks like that will also be a trend line point of resistance in terms of the 3-minute and the 5-minute price chart as well. Where there are overlapping points of resistance, that can tend to be areas where the market will turn around unless there is a real significant push of momentum to move through that. Our best trades, as we often say, are the trades that break out of consolidation, and that is oftentimes we see that move in very significant fashion. And I think the last thing I will say is just talk about transitions. And if we are in, say for example, a scalp trade, a one volume upward, the market has not yet moved, but that particular setup has started to fade, but another setup has come in underneath that, there is reason there to continue to hold that trade based on the appearance and support of a new setup, even though the original setup has begun to fade. We also look at the smaller price chart, smaller charts, the volumes, and points of support and resistance to see where there is a fading setup. Say we're in a bigger setup, if it's beginning to fade, are those smaller charts coming into a line to continue to support that particular move? We have typically a 2-2 or a 4-4 rule, and 2-2, particularly for newcomers, 2-point profit, stop it for the day, 2-point loss, stop it for the day. If you're a little bit more seasoned, 4-4, 4-point profit, 4-point stop loss. If either of those targets are hit, that is a reason to shut it down, at least in a live fashion for the day, and recognize that either you've got your profit and the market is trending, or you've taken good setups, the market hasn't moved, and recognize that there's emotion in play in that day and the market is not trending, and you minimize your losses by not trying to recover on a day where market is not trending.
I would just add that it's our suggestion that no one actually trade live until they've actually established a good batting average demo and have a good track record going forward, so you build success upon success. Other than that, you